Welcome to the Private Lenders Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, thanks for checking out the show. We do appreciate it. Real quick, if you haven't done so already, come join us at hardmoneymastermind.com. It's a very, very good group of 2,600 and change private lenders, capital investors, mortgage brokers. Really good community. Come check us out anytime, hardmoneymastermind.com. Okay, so we've been doing a series of podcasts recently, Ask Us Anything format. And we got a good question that we wanted to address on a standalone podcast from a capital investor who's looking to deploy funds with lending companies. And he asked a couple specific questions about how he should be, in essence, underwriting these lending companies, the kinds of deals they do, how they paper their files to make sure that he's putting money into good loans with a good company. So we're going to jump into some of the specifics of that. Yeah, go ahead.
Yeah, absolutely. And I mean, I think it starts with a good operator and a good opportunity and a good deal, right? I think, as we go through, some things to look out for, some red flags and things like that. And, Chris and I might have separate things that obviously are important. I think those are kind of the two targets that we're going to probably stick to is, how do you make sure that the operator is good and legit? And also, you should be doing some due diligence on the individual loan that you're going to be involved in, or unless it's going to be a fund. But in this case, let's probably just take the fund out of it because I think he's looking to do direct placement based on this question.
Yeah, that is a good way to break it down. Let's look at the loan. Let's look at the operator. Which one should we dive into first?
Let's do operator first.
Okay. All right. I'm sure we both have plenty of things on that. All right. So starting off, I think that when you make contact with a lending company you're considering investing with, maybe you reach out to them, maybe the opposite, you're going to want to get a good feel for the people, just using your own instinct and intuition about how they come off, how they present, just a general graders, ideally an in-person meeting. Like we met, 99% of our own capital investors either once or many times over the years. And just start there. Just start with how you feel about them and then start diving in a little bit more into the operators' backgrounds. Like how long have they been doing this? How long have they been doing this kind of private lending? What were they doing before? Right? What, did they come through mortgage background, real estate investor, commercial lender, whatever it may be? All of those could work. It could be a totally different industry, right? Like, did they have some success and a good track record doing what they were doing before? That's important, right? In diving into someone, I would also go into what their company looks like today. Are they actively lending? How many deals have they done this year or last year? How are they managing everything? What is their team like? And it doesn't need to be like, you don't need to only do deals with a company that has $50 million outstanding. They've been doing it for 10 years. Like that doesn't have to be the case. If they're a good operator and they're a couple years in and they have 25 loans outstanding or something, that can be totally fine. Right?
Yeah.
Just depending on how they do it. Like, those are some of my initial thoughts on operator. What do you think on that?
Yeah, I agree. I mean, listen, there's pros and cons to working with a newer company and working with an established company. If you're working with a company that's been around forever, that's gigantic, you might not get the personalized attention that you may want. You might not want personalized attention either, but you might not want that. And you might get something a little bit more hand-holding if that's what you want from a newer operation that's eager to raise more capital. I mean, I'll tell you, inside our inner circle, Hard Money Mastermind group that meets up, we have a gamut of very, very large lenders and very, very small lenders. And I shouldn't say very, very small lenders, active lenders that have several $1 million deployed of their own money or other investors' money. And I trust them with my own capital just as much as I trust the bigger operations. It's just different. I don't just, obviously track record is important. But again, like keep in mind, if you're investing in an actual deal that they're originating, and we're going to talk about, some of things to look out for and underwrite on that. But if you're underwriting an actual deal, like that's your back door, that's your safety net, because you're putting that money into that deal if you control that. But again, you obviously can't be involved in somebody who could potentially be a fraudster or who could potentially scam your money, because it's still a relationship game. And even though you're potentially invested in that deal, if somebody wants to scam you, they could probably figure out a way to scam you. It would be harder, obviously, with the direct placement model, but like it's possible. Like they could fabricate with whatever they wanted to. So you do want to be cautious on it. And I agree with Chris. Like, start out with a phone call or a Zoom meeting, and ideally do some sort of face-to-face meeting. Potentially use someone who was referred to you, who's maybe someone else is investing with this company and they had a good positive experience. I always look at it as it's just kind of like underwriting a deal. Like you do a lot of due diligence up front, and then after you agree on terms or you agree to proceed, then your life is just made a lot easier. Instead of like, hey, I'm gonna focus on this right now, then I'm gonna focus on this and that. Like focus on it all. Like go all in on the front end. After you build that good relationship, it'll make your life a lot easier as things as newer opportunities come in. So that's what obviously we look for, and a lot of the capital investors that have invested with us, from the beginning, starting 17 years ago, we built good relationships with them, from the beginning, and bent over backwards to make it work. But again, like I do think they need some sort of track record, but it doesn't need to be a gigantic track record. And make sure you ask them ask them the questions. Where are they finding their deals? How much of their own capital have they put into these deals? What's their default rate? I don't know, things like that. What do you do if the deal defaults? What's my what's my participation in these things? Am I just giving you passive capital? Am I investing in a fund? Am I investing in individual deals? Things like that will obviously make you feel comfortable.
Yeah, some other stuff talking about the operator. Take a look at their documents. Like, what kind of agreement are you signing? Deck that they normally show to capital investors. That'll give you a lot of info. Also, do your Google homework, just like you would on any company that you're considering doing business with. Can you find some reviews on them? What's their social media like? Are they active? Are they active on social media? Can you find the operator's personal social media? What is that all about? Underwrite them just like you would maybe somebody you're looking to hire, right, as an employee thing. Like all the normal Google homework that can tell you a lot about a company and its founders is definitely helpful to do. Something else that a lot of people might not think of, if you happen to be in a state that requires licensing, and there aren't many in our niche, in this niche of, fix and flip, commercial lending, all that stuff, there's a handful of states, maybe 7 or 8 of them, most of them out west, that require licensing for what we do. The vast majority of states don't. But if you happen to be in one that requires licensing, look into that. Make sure they have the licenses they need to have, and that they're in good standing, active, and all of that stuff. I think that's about it. I think that's you'll be doing a pretty good job if you check those boxes right there on the operator and the company. Anything to add on that piece?
No, I think that's right. Like you said, definitely Google them. I mean, we Google anybody we do business with.
Yeah, for sure.
I mean, we're Googling, early on when we were taking money on from capital investors, we were underwriting capital investors. Just because we needed the capital didn't mean we were just going to take it on from anybody. So like they should underwrite you like you should underwrite them. Like there is a partnership, and there is a, marriage and relationship in these things. So related to the deal, right? Like what to look for in the deal. And let's be honest, like you're not fully originating these, and you'll probably drive the operator crazy if you micromanage their stuff. But at the same time, you still got to make sure you're comfortable with the deal itself. And especially on the first deal, make sure they have all their ducks in a row. Like do they, by the time you're reviewing the deal, do they have a file, like a full file that you have access to everything that you're comfortable with? Potentially, a loan application, a valuation, a credit report, a construction budget, signed term sheets, everything that you would need if you were going to be lending your own money to the borrower directly, everything that you would need. Now, obviously, this provider or originator or hard money lending company is doing all the heavy lifting and should be doing all the heavy lifting. But I would, I don't want to say micromanage them because that's a bad word and that wouldn't work great. But I would say make sure everything that you would want in that file is already in the file. And if it's not, there's no harm in asking and see what their reasoning is. They might say, we don't find this to be necessary because the LTV is so low, or there's this particular case or this particular case, and that's fine. And that's fine as well. But kind of get yourself comfortable with their process. A big thing is also seeing who's doing their loan docs. Obviously, you want to make sure they're using a real law firm and an attorney to do loan docs. Trying to think what else I'm missing on this. Go ahead.
I got a couple. So I would understand the mechanism by which your investment is protected. Are you investing in a fund? That could be one. If that, most lenders like our size, unless you're a big commercial lender, typically are not operating funds, but they could be, and that can be a good setup if that's the case. If that is the case, you're not going to be underwriting deal to deal. You're going to be heavier on the operator side, and you're not going to be seeing every unit that they put out. But in many cases, you are in the direct placement or co-lending model that is very common in this industry. You will be underwriting deal to deal. So how is your investment protected? Is your name going on the note and the mortgage? We don't totally recommend that, but that is a possibility that some companies are still doing that. Are they doing it by assignment? Are they assigning the interests from their company to you as the investor? How does that work? Where's that document? Who signs it? Who keeps the original?
Good point.
Definitely stuff to look into. And related to assignments or even a participation agreement, how does that work with the title policy? Does the title policy have their company's name and a mortgagee clause with a ISAOA, its successors and or assigns, which means you as an investor if something happens with title? Same with the property insurance. Do they have that mortgagee clause there too, to make sure that your interests are being assigned to you in that mortgagee clause? Very common stuff for that to be in there, but definitely something, just a small box to check. Some of those things like the nitty gritty in the file type stuff.
Yeah.
What else do we have on loan in particular?
I'm trying to think some of the early on questions when we were, and again, when he asked this question, I don't know what his level of sophistication is with doing this, if he's lent money himself or he's for the first time trying to be a passive investor, and is he trying to hook up with an experienced hard money lender or new hard money lender. I'm trying to think of when we were just starting out, what were things that I think our capital investors were attracted to us about? Yeah. Because 17 years ago, we were in our 20s and we had no track record and we didn't have any of our own capital into these deals either. You could always listen, if you're a capital investor, you could ask the hard money lending company, the capital who's providing these deals to you, to put money in the deal as well. Say, hey, listen, you put up 10% of the deal and I'll put up 90% of the deal and we'll be we'll be co-lenders in that deal. That's an option as well. You can be creative on it. I mean, a good operator is going to dictate the way that they want to raise capital. And, that's how we raise capital. This is what's going to work for us and this is not going to work. And if it works, great, let's do business. If it doesn't, it doesn't. But when, so I'm trying to think back of when we started, why do I think capital investors were attracted to work with us? Because I probably wouldn't have been when we started. Here's
a lot of it
$1,000 to do a deal.
Back then, a lot of it had to do with the deals themselves, and they were,
right.
especially at that point in time, that time in the
market. That's where I was getting at. Yep.
Yeah, we were doing deals that were so strong, they were just really, really hard to say no to. Even though we were new as operators, we weren't new as real estate investors or lenders, but HMB was new, right?
Yeah.
So. No, there's definitely, it was deal heavy at that time where you really couldn't say no to the deals that we were getting in, 08, 09, 2010.
It's still deal heavy today, and it should be deal heavy. The deals, you shouldn't be, just like I wouldn't recommend any hard money lender lending, doing any 100% financing deals or low money down deals, if you're a capital provider, I wouldn't do that either. I wouldn't invest with somebody who's doing that as well. It's the same thing. So, I mean, I can't emphasize enough of making sure the deal is so strong, because here's the thing. Even if you invest your capital with like an idiot who doesn't know what they're doing, as long as they don't commit fraud and they have a really good deal, you're for the most part going to be good.
Right.
As long, as long as, your name's, documented appropriately in an assignment and the things like that. But like, a dummy can write a really, 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 really good loan and not know what they're doing, and it'll still work itself out, if you're first lien position and things like that. So I think kind of like what you said, Chris, is accurate. And that was my thought of why I think we were able to raise a lot of capital early on, is not only did we treat it like a business and we were like super motivated and super committed, but like our whole job was like, let's go find some great deals. And a lot of our first time capital investors were actually other hard money lenders that lent money themselves or were lending money through other hard money companies. And they're like, your deals are better. So, hook up with somebody who's got really, really good opportunities, really, 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 really good deals. I mean, that's what this whole business is based on. That, that could be the topic of every episode we ever do, the importance of how good your deals are. So, but that's true. You find somebody who's got really, really good deals and really good opportunities, and do that, and stick to deals that you understand, that you're comfortable with, right? Like, if you don't want to mess with commercial deals, don't invest with them on their commercial deals. If you want to only do single family fix and flips in the local market and they're doing deals there, then stick to those. And if you don't really care because you believe in the operator and they're doing really good business and you trust them on the deals that they're doing, then that's fine as well.
Yeah. So a couple other tips that just came to me when we were talking about it. When getting started with potentially investing with a lending company, I would ask for a few of their recently closed deals. Take a look at the file, see what goes into it, see if they're the kind of stuff that you would want to invest in. And also, there's nothing wrong with asking for referrals to other active capital investors of theirs. And that's happened with us before. It doesn't happen every time, but like if somebody wants to speak to one of our capital investors that has been doing deals with us for a long time, that's totally fine. They can absolutely do that. And that'll make the investor feel way more comfortable to like get an idea of who else is investing in these deals. So yeah, just to wrap up there, I mean, take a good look at the operator, see what they're up to, what they've done in the past, if they have everything in place in terms of their company and their team that they need. Take a look at the loan itself, get comfortable. If you haven't underwritten these kinds of loans before, just look back to our previous episodes when we're talking specifically about underwriting the collateral and underwriting the borrower, so you get a little grasp on that. And if you get a good feeling about the operator, if you get a good feeling about the deals they're doing, check a couple of their references in terms of other capital investors, and you should be in a good spot. You should be in a good spot to earn double digit or close to it passive rate of return working with a good lending company, and everybody wins. That's the goal.
Well, I got one more tip.
Yeah.
I would do one deal first and have it cycle through before you really start going all in and deploying lots and lots of more capital. See how it happens. And when we talk to, on the other side of this, when we talk to hard money lending companies and we tell them, and help, potentially if they have advice about raising capital, we say the same thing. Do one deal with a new capital investor, make sure it works out, right? Because this is a relationship thing. It's got to cycle through. The worst thing the worst thing that most people do is they try to scale too quick and they have too many deals, and then their early deals don't cycle through before they're writing new deals. And all of a sudden they're too far deep between like, oh crap, these were all bad deals. I wish I saw this cycle through. So start slow and then work your way up. And it'll turn into a good relationship. If you have, real capital that you're looking to deploy and you have a good relationship with a real operator who's doing really, really good deals, it could be a long term, family legacy relationship. And, that puts you in a good spot.
Absolutely. Really good question, Marty. Thank you for bringing that up. I'm going to email this episode directly to you once it goes live. So again, appreciate that. That is the pod for today, guys. And we'll see you here next time on the Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.